All right. Hey, everybody. Thanks for joining us here today for another episode of APIsec University Presents. Today, we're talking about securing the APIs that power the banking sector. I'm joined by our good friend, Don Cardinal. Don, your video has suddenly gone all black.
Oh,
Just a heads up, we can't see you. But for everyone that's joining us today, there you are. You're a little bit witness protection-y at the moment. Hopefully, there you go. Now we can see you.
no worries.
We're all home studio experts these days, but it's nice to see all the activity here. Scotland, Brazil, India, Nigeria, Chile, my home country. Even that's awesome. Really glad to have you all here today. We're talking about securing the APIs that power the banking sector. And I couldn't be joined by a better guy than Don Cardinal, who's the Managing Director of Financial Data Exchange. We're going to learn a lot about that here today. Unfortunately, we will not be joined by Dr. Nita Davis at Microsoft now, formerly at Federal Reserve. She had a last-minute conflict that could not be ironed out, so we're going to have to, get Nita back on a future show here. But really thrilled to welcome Don here and welcome everyone on the chat to participate, share your questions, let us know what you're thinking. But to get things started here, Don, let us know a little bit about your background, and we're of course going to want to dig into what your organization is all about.
Sure. Hey, I'm Don Cardinal, Managing Director of Financial Data Exchange. We are the not-for-profit standards body bringing open finance to North America and other places around the world. I've been here 4 years since FDX was stood up as part of its founding. 23 years with B of A variety of careers to talk to you about that. Most recently, I did their email authentication on their DMARC, helped build a BIMI standard, and was in InfoSec and digital banking, both there and in their military wing. I've never served, but I love military banking customers. They follow orders and understand security, which is a great set of banking customers.
Yeah, and I can tell from personal experience that hardcore Texas A&M guy. If you ever get on a Zoom with
Right.
Don at his home office, boy, there's a lot of A&M paraphernalia in the background. So let me share another window here because I do want to kind of tee up what this financial data exchange is all about. But before I do, of course, we're all brought here thanks to APIsec University, which you're all very familiar with, I'm sure. But I did want to do a little promo for our next webinar, which is happening 2 weeks from Thursday. PCI DSS 4.0 requirements for API security. You heard it here first. Best way to register for it is to just come to our APIsec U website, click this top banner, and we're going to have some really awesome experts from Moss Adams, including our favorite Corey Ball, and we'll be talking about PCI compliance because there's a whole bunch of API requirements in PCI DSS 4.0. But getting back to the topic of today, this is Don's website. So Financial Data Exchange, it's a nonprofit. It is kind of operated and run and curated by the banking community and those that sort of support the banking community. But can you give us a bit of background on what is Financial Data Exchange and what is your mission?
So our mission, let's start with the mission because it's all about the consumer and really getting to modern data connectivity and open finance is about letting end users, whether it be small and medium businesses or corporations or end consumers, have access to their data in a way that they permission and just what they permission, nothing else, and do so in a secure manner that is, not burdensome at all to them. It's got to be easy to use or no one will use it. And you do that by having common free standards available to anyone, just like USB or Bluetooth. It's the common rails that everyone does that. Our members, we have 235 member organizations, only a third of which are banks. 2/3 are not banks, actually. It's a big misnomer. Decided, you know what, we needed a not-for-profit to kind of own and manage this so that no one with any commercial interest is managing it. We didn't want to have that risk or that perception. And so we're kind of Switzerland. We bring together folks who are two ladies in a garage or a $1 trillion company or anyone in between, one company, one vote, best idea wins, leave your market cap at the door, and just build this thing. Let's innovate. Let's figure out how to make this better, faster, which is why we started with open finance in North America. We went past open banking because we looked at the firewalls and said, what's going out? What are the customers are voting with their thumbs? They used to vote with their feet if you're over a certain age. Now it's voting with your thumbs. What data are they asking for in their apps and other FIs? And it turned out that's what we needed to have in the spec. And so that's what we've built. We have over 665 data elements in our spec and growing. But we said, we can't get away from screen scraping and sharing credentials until we eliminate the need to scrape data. So that meant everything that you're being scraped today has to be in the API. Better yet, we also had to have all the players, data providers, which typically banks, brokerages, insurance companies, aggregators, so Plaids, Yodleys, Finicities, MXs, Fiservs, the world, Flinks. And then finally, at the end, you've got all these apps and then all the people that service them. So we have this huge international community, that's why we got to 235. And we're building the spec commonly. It's kind of fun.
Yeah, and I will admit that we are one of the 235 proud new members of the Financial Data Exchange. Personally attended the FDX Summit back in April. Really amazing event for anyone in the banking or banking related sectors that's on the call today. Highly recommend you check it out, financialdataexchange.org. But getting back to like part of your mission, so one of the sort of primary products, if we want to call it that, of FDX is the FDX API. So it seems like you've taken a different approach than we've seen in other regions, other continents, where it's sort of a government-driven, mandated, regulatory type of approach to banking interoperability, banking and exchange, financial exchange. So tell us about why you went that route and what is this FDX API?
Sure. I mean, the FDX spec is several things. Certainly, there's an API, the data element, but there's also a large UX piece of it, user experience, user design guidelines, and then there's of course a security baseline, security recommendations as well. And you kind of need all three legs of that stool in order to have a meaningful presence. With respect to why we're doing the hair differently, governments aren't known for being innovative. And there's another old saying: architects should be forced to live in the buildings that they design. Similarly, governments don't have to live in things they design. So they'll come up with designs with policies in mind, but without the actual fingers on keyboards, day two, living with it, skin in the game. So the thought in North America was, hey, let the governments come up with the policy outcomes, the what we want to have happen. But the actual how, the engineering of it, let's let industry do this because they have to live with it. And they're the ones who have to make the customer happy at the end of the day, and they have the direct relationship with the customer. So they have all the skin in the game to make whatever it is scalable, affordable, and easy to work with. And so we've had this really, I think, a very mature and I think a very sober outlook from Ottawa and Washington to say, you know what? We don't want to play in the data technology space. We're going to say what we want to have happen, but you're the experts. As long as you can hit our requirements, we're okay with you guys building to that. And one of the great examples, and I believe it's in, I'm trying to think, PSD1 or it could be a GDPR, where they mentioned in the law, Netscape Navigator. Okay. Yeah. So when you get hyper specific, that's really great at a point in time, but it's already stale.
Right.
And technical standards that don't change age like milk. And so they're still referencing SSL, and TLS1. So again, the reason is with this demarcation, I think is better for everyone, which is why we have features in FDX that nobody has planet-wide in their open finance.
So you mentioned Ottawa and DC. So is this a North American API, or are you finding other regions, even regions covered by other regulatory drivers, are adopting FDX?
We have some folks who are poking around at it from other jurisdictions. We have members on 4 continents. We have one member in Japan who's implemented FDX 5.2-ish. There's a few unique things they've had to do to support kanji and kana, but I think they'll be able to harmonize that as well. But we wrote FDX to be global ready, and I'll give the British props for being first, and they had the courage of the first draft. But if you look at the spec around the world, everyone has REST APIs. Everyone has JSON objects. Everyone uses FAPI 1.0 Advanced for the authentication stack. And if you look at the data enums, they're incredibly similar. FDX 1.0 was the seed or genesis of open banking in UK. So when people use the UK spec, they're actually using FDX 1.0. I used to teach university, and if you were to do a diff on some nations, pick your nation out there, and the FDX spec, you two worked together on this, didn't you?
some borrowing of content. Well, probably
All right.
for
Yeah.
good reason, right? So
Yep.
let's talk a little more specifically about some of the security aspects of banking and banking exchange and the API. So I went to your conference and I heard a whole bunch of talk around screen scraping. And I was kind of like, is that still a thing? I remember signing up for Mint way back like 10, 15 years ago, literally sharing my username and password and thinking, geez, they just must be logging in as me and yanking fields and bits of data off the screen. Is that still going on today?
It is still going on because it's useful, and we have this long tail of smaller financial institutions. It's going to be around for a while. If you think about it, in North America alone, there are over 15,000 banks, credit unions, brokerages, investment companies, insurance companies. That's a lot of endpoints. And if you think about EMV card rollout, right? We all agree chip's the newer technology. Magstripe's been around 40 plus years. Yet I'm still buying petrol or gas with Magstripe in a few mom and pop stores. So you have this long tail of folks that we can't disintermediate. We still have to allow connectivity because they want to file their taxes, apply for mortgages, whatever. So we're organically displacing that. Now, the good news is we're actually way ahead of traditional adoption curves for new technology. So if you look at the adoption curve for online banking, mobile banking, or EMV chip, those took a while to get out there. We're actually at much faster pace when you look at number of households on the FDX API. But it's still going to be a while before mom and pop credit unions and some of the small regional FIs have this technology.
Yeah, and it seems like it's part of what FDX API, but and frankly aggregators that have emerged, right? I mean, if you're a small credit union, it must be pretty daunting to face integrating with every last payment platform that there is out there and so forth. So having some standardized APIs or having aggregators that can give you access to the whole community seems like the right approach. And it was interesting. One of the things I learned at your conference is, of course, screen scraping just sounds like a bad idea, right? It's sort of a brute force approach, and it really requires users to let someone else impersonate them with very little way to revoke that access, short of going in and changing your passwords. But there's also like a massive infrastructural performance, data overload issue, right? So screen scrapers are going to scrape the screen every single day. I may not log into my bank, more than once or twice a week, but those systems will, really, drive a whole lot of load. And in fact, geez, we see APIs now are dominating, the internet traffic. So it certainly feels like a lot more efficient. Is that your take as well?
Yeah, it's been borne out with case after case. When you talk to FIs and even core processors, a third of the volume of a typical bank or credit union's online traffic is aggregation. So a third of your infrastructure, a third of your hardware is busy painting screens for other computers who don't really care what the screens look like. Screen scraping is probably the least efficient way of sharing data known to human minds. It was really clever in the 90s when it was built out. Hey, I can link to all my accounts and I don't have to type it in. That's really wonderful. The world's
Yeah.
got a lot scarier in the last 30 years. So we're also seeing people who said, you know what, I've migrated my traffic off of scraping to an API, which is 100 times more efficient. I actually spend less on hardware this year than I did last year. When did that ever happen?
Yeah. Yeah. Well, and sort of building on that, right? Efficiencies and so forth, but this seems to relate to security as well, is data
Mhm.
minimization, right? And I believe you have whole, working groups dedicated to this. So explain to me and the audience, like, why is that important? What are the risks of not doing data minimization? Help us understand a bit more there.
Sure, a couple things. When we were at the summit, we had the Comptroller of the Currency of the United States on stage. And they're the bank regulator in the United States for our international friends, and he was talking about safety and soundness. That is his mantra, and pretty much every banking regulator talks about safety and soundness, and we all hear about adverse events, things that happen. One of the ways you can prevent secrets from leaking is not sharing them. And we've all heard of rule of least privilege, right? Only the data you need to fulfill whatever you need. And then once it's no longer needed, get rid of it. It's a net liability. And if you think about it, financial services and even fintech is a trust-based business. That's the only real asset you have driving your valuation. So anything you can do to minimize risks is going to make your venture backers happy and to make your risk partners happy. So the idea is when a customer permissions data, we tell them what data, from whom, through whom, for what purpose, and for how long, and only that data. What's unique about that is instead of anything the eye can see under a password-based system, this only allows you to have a token grant of certain data fields, which is great because God forbid you saw in the Equifax breach, you had test code promoted to production and it was doing things it's not supposed to. It prevents weird escalation of privilege. For example, if I'm a tax prep software, why am I pulling across personal data? Why am I pulling across transaction data? I should be here getting tax forms. What's going on?
Right.
And you had that inherent check to always make sure that you're staying in your lane as far as data scopes. So it starts with the customer permissioning only what they want to. Two, it starts with the provider saying, hey, I have a great check. Yeah, I know it's a known party, but even at the app level and the OSI model, I can look at what data is going out, make sure it matches what's being requested. And it's only mapping what I should have. It's identity and access management, basically. And then two, what's requested out, we also ask under our certification regime that if you had to hit an endpoint, it may have 30 elements in it, but you really only needed two.
Right.
Do you attest that you're dropping those other 28? And we're making our users of FDX attest that, yes, I'm throwing away data I don't need downstream. We're not passing along superfluous or extra data that isn't requested. Even though we had to ask for an endpoint that had 30 fields in it, I only needed two. I'm going to drop 28 on the floor. And so by minimizing it along the way, we're reducing the risk all along the way.
Well, and it's interesting. Some of the working groups that I got to eavesdrop on, talked about data minimization. And geez, when you have 235 members, there's probably 235 different schemas of what data they're capturing. And I think under like user account fields, it was literally hundreds of different fields being identified across the sort of community. But I guess that's all about how you do business internally, what you need, what data, what fields. But when it comes to actually invoking the API, you're making members certify that they're not using or requesting or keeping any fields that really aren't necessary for that transaction.
Correct. It's about basically attesting you're basically a good data custodian. And so UX starts with the customer. Customer's in charge here in open finance. So what data do you have? Or are you really wanting to permission? Those requests, we call them data clusters, tie to specific endpoints at the bank. Let's just use that as an example. And only those. Two, if we do of that cluster may say 35 fields, but I only needed 3. I'm just checking your balance for God's sake.
Right.
All right. Well, the recipient is then certifies that, yep, and I'm going to throw away anything I didn't need in that set. It's like I only need 3 eggs for breakfast. I had to buy a dozen. I'm going to throw away everything else because I don't need those.
Yeah. So tying a little closer to security, right? So we've touched on sort of like good housekeeping and data minimization and why to avoid screen scraping. But let's talk security, because I know you've got security working groups within this community of banks and financial providers. What do you guys focus on in terms of security in these working groups?
Well, it's a couple fold. Again, we have a security baseline where we do talk about best practices and guidelines that, again, controls commensurate with risk is the watchword. Now, for our authentication standard, we are a FAPI shop, just like everybody is around the world. The OpenID Foundation has a financial grade API auth stack. It's an extension onto OAuth 2. It specifies MTLS and some other controls
And
into
just to
it.
be clear, sorry, FAPI is financial. What is FAPI?
Grade. All right, so the OpenID Foundation put out an extension onto OAuth 2 that's a little stricter, and it's called Financial Grade API. Basically, there's a lot of things. There's some things in OAuth 2 that allow some variation and some, I guess, non-standard items. And they really wanted it for financial services. You need to have something very strict, very much you get what you expect in it. So within OAuth 2, FAPI actually mandates MTLS and some other elements as well. It's a limited set of ciphers, for example, in MTL and FAPI, whereas OAuth 2 has this longer list of ciphers they allow.
Got it. And so this is so FAPI is one aspect of the security working group at FDX.
Yep. So we've adopted FAPI. It's the OpenID Foundation's product, but that's one piece, and that's just the auth stack. That's the three-legged OAuth handshake. Connect your resource is who you are. Great. Now I have an end user in there. The end user then authenticates. Now, even within the end user, we talk about, for example, using strong customer authentication or / multi-factor auth, depending if you're reading NIST or GDPR. But I mean, it's basically the same thing. And we're a big FIDO shop. We're a big believer in FIDO biometrics for your strong customer auth, your additional factor. One, it focus group tests way better than any sort of credentials based or out of band. Two, SMS is being deprecated around the world. And three, we gives a lot of non-repudiation for a lot of financial transactions. So we believe, again, within the FIDO principles as well. So that's a big piece we really strongly recommend if you have that capability. But we also talk about things internally as far as baseline controls. For example, we talk with MTLS, you've got a certificate. Well, do you have a HKM? Do you have key manager? What are you doing? What's the minimum length you're specifying that? We also specify TLS 1.2 and higher. I even saw somebody who was, they were requiring all their vendors to be on TLS 1.3, which I had never seen before. Good on you, but that's a pretty tight set because 1.4 isn't out yet. So
Yeah.
there are different aspects in the OSI model that we're trying to mention in our guidelines without being overly prescriptive.
Yeah, absolutely. Well, and when I first got to know you and FDX, I learned a lot about financial authentication and how do we make sure that Dan is Dan or that Dan is authorized a given provider to have access. So I see a whole lot of talk in the FDX community around authentication,
Yep.
but does it go beyond that into like, let's say someone or some entity is authenticated to my account. It's another thing then to sort of control what they can do as me, and we see so many examples of real world breaches. We have whole courses dedicated to this in the in APIsec University around what causes these breaches, and it's typically the things that we see a lot. We do see a lot of authentication issues, namely lack of authentication or very weak authentication, or it's authentication without authorization control. So we see a lot of examples where Dan logged in to Peloton and then accessed all 4 million users. Right. That is a real example of something that happened. Right. So that's not an authentication issue. That I had to log in. I had to prove that I'm me. But then I was able to perform all kinds of activities that I really shouldn't be, and I was able to see data that I shouldn't be able to see. So how does that factor into FDX? How do you address those kinds of issues?
Sure, and it's a great topic, and it's something we have to, especially on the digital banking side. They're business folks, not security professionals, and we have to separate auth-in and auth-c. Authentication with authorization. I know it's Dan because I've done authentication and I've done multi-factor. Yeah, absolutely is you. And you're coming in from an app, and I know app 123. It's this neat little app I have on my phone, so I know the app. It's coming in. That's great. So I've authenticated both, but authorization is another key piece. We talked about it on an org level. So the app 123 on my phone should only be pulling back, I know, bank statements or just tax forms. And so you have to have, if you want to extend your identity and access management mantra to, wait a minute, these are the only resources this app should be accessing. So at an organization level or an app level, client level, if you will, there's that piece you have to have. And then Dan himself is like, wait a minute, Dan only has bank statements. He doesn't have any brokerage statements. So why is he making a call against the brokerage statement database?
Yeah.
And so you've got to have authorization baked in there, auth-in and auth-z both. And I think that's really crucial. And of course, your standard controls as well, right? So you have, your access control list, your WAF, to make sure the whole free world's not pounding on it. You've got your DDoS preventions, and to make sure, again, you're only getting authorized organizations even touching that endpoint to make the request in the first place. And there's more to it than that. We have several security companies that are members of FDX and identity members that are members of FDX, along with APIsec, of course.
Yep. Yeah, I mean, we're big believers in really testing those controls, right? It's one thing. I mean, it's hard to define authorization at an API level, right? An API is an interface to backend functionality, and we're strong believers that authorization needs to be controlled in the app logic itself. But you need to confirm and test and look around for any gaps that exist, and that's frankly where we see the majority of the breaches that happen out there. I'll do a little mini infomercial for one of our courses here because I think it's relevant. And for everyone that's on the chat, please jump in with any questions or comments that you might have. We started this effort, Corey and I, back in August. We were actually over 50,000 students. It started with this pen testing course that Corey put together, the author of Hacking APIs. This is super in-depth, 12 hours, lab work, hands-on. But we then created this security fundamentals course, and it's taught by me, but we go through, why is API security a concern? We look through real world breaches and understand how did they happen. This is where you see a whole lot of logic flaws, logic gaps that get exposed through APIs, just like legitimate functionality, and why it's so critical to really test your own APIs and look for those flaws that might exist. We dig through the OWASP top 10, of course, the 2023 edition. We talk about the 3 pillars of API, that being governance. How do you create and develop and operate your APIs? How do you test for vulnerabilities, and then how do you monitor for threats? And we provide some conclusions and best practices. This course, if you haven't taken it, it's 90 minutes long. A lot of banks and other organizations are now making this mandatory. It's free to take on our website. You can even deploy it internally in your own organizations if you want to sort of control and assign this to your own employees and track their completion here. Let me see what we got here. As the API, here's from Sumesh. As the API is ubiquitous, why is there no API security standard like PCI DSS? That's very interesting. I don't know if you've got an opinion on that. I certainly do, Don.
Yeah, there's been some work on what a common risk assessment would look like. The question is, with PCI, you had a card industry. You have large card networks that get together and do that. With APIs, who do you make the owner? Who's going to own that? What standard setting body? Is it ITF, W3C? Is it, who NIST? Again, I think one of the first things is, okay, well, who's the authoritative body that can do that? And then, like everybody else, everyone has their opinion on what is a best practice.
Yeah, indeed. And what we see with, regulations vary from industry to industry. I mean, if you look in healthcare, you've got things like HIPAA, which basically say, you've got to make sure my data is private. It doesn't tell you how to do it, what to do. It says, make sure my data is private, portable, accessible. But it doesn't say how to do it. And then you've got others like PCI actually is quite prescriptive, right? It says, you have to do this, you have to do that. You look at FedRAMP, you have to do monthly, web interface scanning, right? That's written into the code. So I think, Sumesh, a lot of regulations don't say how to do it. It tells you what the objective is, and then relies on things like frameworks, right? Like NIST 853, SOC 2, and many others to help you really figure out how to go about achieving those objectives. So there's not a universal API security standard. It would be probably a pretty messy thing if you tried to make it global. But depending on what sector you're in, there's going to be different relevant sections. Of course, we're going to be talking about PCI in 2 weeks, and we're going to talk about many other sectors as well. Let me see what we got here. Ed, many confuse the OWASP top 10 with the OWASP API top 10. I'm guessing it's a question, is there a plan to clarify? Some vendors are confused with this as well. And I just learned there are actually 9 different OWASP top 10s, if I have the number right. The sort of classic OWASP top 10 is the web application security top 10. And if you're not familiar with OWASP, that's the Open Web Application Security Project. If you're not familiar with it, I highly, highly recommend that you become familiar with it. It's really sort of an industry standard, or the place to get started if you're looking at application security. As you rightly point out, in 2019, they made a new edition of the OAuth Top 10 for APIs. So there's a specific dedicated API Top 10. That Top 10 is now being refreshed as we speak. I think the final version will come out within a matter of days. So the 2023 API Top 10. There are some commonalities. If you're dealing with web applications and APIs, you should be familiar with both, is all I can say. The API Top 10 is going to be very specific to APIs, and you should be well aware of those. Christopher, share the link to the 90-minute training. You're looking at it right now. All you got to do is go to APIsecUniversity.com. And I'll just show it to you here. If you just scroll down to courses, you'll see it right here, dead center, API Security Fundamentals. You get a certificate and badge, and we love to see those proudly posted on folks' LinkedIn's. Let's see what we got here from Nick. Are you finding growing population of API bug bounty hunters? Do you see traditional bug bounty hunters shifting to APIs? I'm curious, Don, it's maybe not specifically to you, but, you're in the API sort of business, if you will. What's the sort of market trend that you're seeing here?
Well, again, you're starting to see, and some people call them responsible disclosure. Fine. There's some very entrepreneurial people out there looking for known vulnerabilities, whether it be Postman or whatever, and saying, "Hey, I've noticed you allowed this kind of an over-inclusive get or something." So we're seeing people starting to do that just because they're looking at new ways to monetize their existing, red team skill set.
Yeah, and indeed, and where a lot of folks, I know we have some sort of beginners looking to get into cybersecurity, where to start. The fundamentals course is great. If you really want to get your hands dirty or get into bug bounty hunting, go take Corey's course, the API pen testing course, and you will learn very hands-on skills. I see a message here from Jim. HIPAA, that's why HITRUST came to be. Interesting. I gotta learn more about that, Jim. Love to follow up with you. Familiar with HIPAA, less so on HITRUST, but we'll definitely need to do a session on that. What protocols from Ravi can be tested using API testing? Well, geez, I don't know any that can't really. I mean, what we see predominantly out there still is REST. Clearly, there's still some SOAP out there that, is hanging around. GraphQL, absolutely becoming more and more popular. My 2 cents on Graph is, and I'm no expert whatsoever, but it seems like a very powerful protocol, and it's very developer friendly. It can basically, turn into the API you wish existed, kind of on demand. But for that reason, we tend to see much less GraphQL exposed as an inter-organization API. Don, I don't know if you have any opinions on the protocols.
Sure. I mean, one, standardization is really important, and you've got folks standardized on REST already, and it's global, not just in North America. GraphQL is really great, and developers love it. It is a lot easier to use. The hard part is it can be burdensome. If I have 1,500 fintech apps making GraphQL calls, I've got to pull back the entire library of endpoints and fields. That's a lot of burden just to go. Oh, I just need balance.
Yeah.
It's like pulling the whole library forward when all I really needed is one thing. So it's great for certain, like I said, my old shop teacher said, use the right tool for the job, Cardinal. And so it's really useful in certain instances, but for the kind of bulk stuff we're doing for open finance, I don't know that it really is the right thing, although I've seen people use it in open finance. Kind of vague answer.
I attended a webinar or a conference recently, API Days in New York, and there was a presentation from a big retailer, and on the one hand, they said don't use general APIs, right? Make them specific, make them have a function. And then on the other hand, talked about GraphQL and how they can be turned into any kind of API that you really want it to be. And then they gave an example of how, things can spin out of control. They showed a nested query that started with, request X, and then for every X, request Y, and then for every Y, request Z. And next thing you knew, there were 6 million requests happening. So, yeah, we tend to see GraphQL internally, much less so as an external API that's being shared, or if you're going to offer it to customers and partners for integration. See a question from Aditi on how to, it just moved up the screen here. How can you restrict account enumeration in open banking? Yeah, this is a good question. I don't know is this actually covered in the FDX specs? What's your policy, your best practice there?
Sure. I mean, so it starts with the customer, again, under the UX guidelines, declaring what is it you need. Hey, I want to get a mortgage. Great. I'm going to need your transaction data. And that's really great. So you go over to the financial institution to get authenticated and authorize the deal. And they said, oh, by the way, here are the accounts that would be pulled over. I go, whoa, wait a minute. I'm in my parent's account as well. No, not that one. What about this? No, not that one. And so you see with data minimization, as well as putting the customer in charge, the ability to exclude data types. Maybe you're a small business and you've got your personal and business accounts at an FI. Go, no, I don't put my small business stuff in here. This is a personal loan. And so the ability to downscope there. So on the initiation and also at the FI data source, really it could be anything. So you see the ability to get always down source and deselect data all the way through.
Yeah, and as a lay person here, our very basic advice here, DT, is don't use numerical identifiers. Don't use sequential identifiers. Throw a character or two in there. Make it more challenging for an attacker to simply iterate through your database. We've seen so many examples of millions of records harvested through APIs. Almost every one of those, I'm sure, took advantage of incremental IDs and that sort of thing. And actually, I realized as I say that you might have been asking about a different question around enumeration. I was thinking of incremental IDs. You're talking about enumeration in the sense of finding APIs and the like. You don't want to put any API endpoints out there that don't belong. I remember talking to a security company, no less, that had a bunch of published APIs and then a set of unpublished APIs. And in this case, they were actually comfortable with those unpublished APIs getting discovered. As a matter of practice, if you have unpublished, undocumented APIs that are available, expect them to get discovered. And make sure that you're okay with those APIs getting actually discovered and used. All right. Here we have a question. Which version of FAPI? Oh, there you, Don. You just answered it. So the question was, which version of FAPI does FDX conform to? Do you want to talk about that real quick, Don?
Sure. The latest ratified spec is FAPI 1.0 Advanced. There's also a FAPI baseline when you're just doing the organization to each other without the consumer. And we also support CIBA, which is the client back channel authentication as well. So we already support not only FAPI 1.0 Advanced, but also some other FAPI baseline for more utility connections, and then enough elements that are already in FAPI 2. And FAPI 2 is finally ratified, and the tea leaves say Q3, Q4, likely Q4, that we will also support that as well.
Yeah. And as we get to wrap up here, I see a note here from McKenna on the API security fundamentals. There's some misalignment. If you find something that's not quite right, we always want to hear about that in our courses. We do our best to keep them accurate and up to date. You can imagine it takes a lot of work to put these courses together, and things do change. So with that, Don, thank you so much for being a part of this. We really appreciate you taking time and sharing your perspective, advice, wisdom. We encourage everyone to check out financialdataexchange.org if you are in the banking sector. This is a really great community to be a part of. I can attest to that personally. We are just one more little plug for our upcoming webinar, which you can find on APIsec University. So right here at the tip top, our upcoming webinar is PCI DSS requirements for API security. The 3.0 edition, I've just learned, didn't really talk about APIs. The new version that is now out and will require compliance by March of next year does talk a lot about API security. So come join us in 2 weeks and learn all about that. And I know there are a lot of questions around, are we going to make this available? Are we going to post this? Yep, you bet. If you registered for this, you'll get a note from us probably within the next 24 hours. We'll post this on YouTube as well. And with that, thank you again, Don. Really appreciate you joining us. And thanks everyone for joining us here today.
Thanks for having me.